Hello guys, welcome to today's video. In this video we are going to be discussing about a particular indicator that can help you to become so profitable in the market. If you understand and use it correctly, many traders struggle to identify a trend breakout in the market. This indicator that I'm about to share with you solves this problem. So stay to the very end of this video because I'm going to share in details how to apply this indicator. But before we go into the video, please use some of your time to like, subscribe and turn on the notification bell to get notified when we upload a new video. So without any further delay, let's start. The indicator that I'm about to share with you is called the Breakout Finder, created by Blue. The Breakout Finder is a technical indicator used for trading that identifies potential breakouts in the market. It is a versatile indicator that can be used in any market, including Forex, stocks, and commodities. This indicator is a volatility break indicator that searches for breakouts and breakdowns and draws a square if there is one. The indicator uses pivot points to determine potential breakout levels and draws lines on the chart to indicate these levels. Pivot points are points on a chart where the market changes direction, either from an uptrend to a downtrend or from a downtrend to an uptrend. The Breakout Finder uses two types of pivot points, pivot highs and pivot lows. To add this indicator on the chart, let's navigate to the indicator search bar. There we are going to search for Breakout Finder made by Blue. After that, let's set the indicator. Then we go to indicator setting. On the input setting, we are going to set the period to 6. Set the max breakout length to 300. Set the threshold rate percent to 4. So let's talk on how this indicator works. The breakout indicator checks for pivot highs and lows in the market and keeps track of their levels and locations. It then looks for bullish or bearish cut formations where the price makes a new high or low and then retraces slightly. The indicator looks for a minimum number of tests to confirm the breakout and checks whether the open and close prices are within a certain threshold of the breakout level. This indicator has two components, which are the bullish and bearish rectangle and the bearish and bullish signal icon. When price breaks out of the indicator bullish rectangle, it will print a blue signal icon telling us that price is going up. And when price breaks out of the indicator's bearish rectangle, it will print a red signal icon telling us that price is going down. Understanding how this works, let's see how you can enter a trade using this indicator. Let's see examples on how we can place a trade using this indicator. Here you can see that price has break out of the indicator rectangle, giving us a red icon which tells us that price is going down. Then you can enter a trade setting your stop loss above the previous high and targeting at least 2 risk-reward ratio. On uptrend, you see that price has breakout of the indicator bullish rectangle and it has printed a blue signal icon telling you that price is ready to go up. Then we can enter a trade setting our stop loss below the previous low and targeting 2 risk-reward ratio. In order to avoid all this false signal giving by the indicator, you should know how to identify trends in market. This is when we apply another indicator that will help us identify trends in the market. This indicator is called Super Trend. To add this indicator on our chart, we navigate to the indicator search bar and search for Super Trend. Select the one made by TradingView. This indicator helps us to identify trend. And looking at the indicator, you will notice that when price is on downtrend, the indicator will turn red, telling you that price is on downtrend, and when price is on uptrend, the indicator will turn green. So, understanding how this indicator works, let's see how we can enter a trade combining both indicators. Here is on Sol Luna USDT on 5 minutes time frame. Seeing that price breaks out of the indicator bullish rectangle, giving you the blue signal icon, telling you that price is ready to go up. Then you are going to check the super trend indicator to know if it is showing you the green to identify that price is an uptrend, and when you see that it is showing green, telling you that price is an uptrend. Then you can enter a trade, setting your stop loss below the previous low and targeting 2 risk-reward ratio. As you can see, this is a very good trade. Here you see that price breaks out the indicator bearish rectangle, giving you the red signal icon, telling you that price is ready to go down. Then you check the super trend to see if the indicator has shown red to indicate that price is on downtrend. And seeing that indicator is showing red, telling you that price is on downtrend. Then you can enter a trade, setting your stop loss above the previous high and targeting 2 risk-reward ratio. Here, let me tell you how you can add more entering confirmation using this indicator. When you see that price breaks out the indicator bullish rectangle, giving you the blue signal icon, telling you that price is ready to go up. All you need to do is to wait to see price coming back to the middle of the indicator bullish rectangle. When you see that, you can enter a trade targeting 3 risk-reward ratio. This is applicable on downtrend. But when the pullback is above or below the indicator bullish or bearish rectangle, the setup is invalid. So traders, as we have come to the end of this video, if you have any question, leave it on the comment section. We will be glad to answer them. And also remember to like, subscribe and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you on our next video.